located here in Austin, Texas.
Perfect. I think Chris.
Let's do a little intro.
With the song?
Yeah.
Hi, welcome to Cryptosphere, the podcast where you get to choose what we invest in. My name is Ryan McNutt, and this is Christopher Reese. We are both co-founders of Sphere DAO.
And in our inaugural podcast for Cryptosphere, we're going to be talking with Aiden and Kevin, who are both founders at AthleteX. AthleteX is a athlete tokenized offering where collectors can buy athletes that they follow for major sports, and the athlete currency correlates directly to their performance in comparison to other athletes within the same field. We're looking forward to hosting you, and we'll have a good time.
Aiden, do you want to talk about AthleteX and kind of what you're working on?
Yeah, for sure. Again, my name's Aiden. I'm working with a team of about 10 guys on a project called AthleteX. You can find us at athletex.io. In short terms, we are a decentralized autonomous organization creating a DEX, which stands for Decentralized Exchange, on the Polygon network. And our DEX is created for the trading, buying, and selling of what we call athlete performance tokens. Now, athlete performance tokens are a novel asset class that we're bringing to the ecosystem because they are token contracts that trace athletic performance data through sports statistics and creates digital prices for these athletes in a decentralized ecosystem. So, for example, LeBron James, right? If he has his own token on our DEX, we're pulling his sports statistics, putting them on chain, and we're calculating a price based off his statistics and his performance that should accurately represent his performance compared to the average in his league. So, for example, if you were to, if hypothetically, if we existed back, several years ago, before LeBron James' career really took off, and you were to buy his token, and he performed excellently, he, created the career that he has for himself now, you would have made money. Just like any other asset class, you get in early, you speculate on its performance, and if you speculate correctly, you make money when the value of that asset appreciates. In this case, you're investing in sports performance. So yeah, that's the really broad overview as to the value that we're bringing to the ecosystem.
Very cool. And are these tokens, are they NFTs, or what's the underlying technology for the tokens?
So that might be a question better for Kevin to answer. He's on this podcast too, virtually. Kevin, are you there?
Hey, how's it going, guys?
Yeah, you want to go ahead and introduce yourself and, explain, I guess, the answer to the question that Ryan asked?
Yeah, so short and sweet intro about me. I'm Kevin Camto. So you guys are in Austin, Texas. I'm based out of Boone, North Carolina. Yeah, quite a ways away.
Cool.
Yeah, so emphasis on distributed and autonomous, am I right? Anyways, so I really focus heavily on product development and general strategy here at AX. And to get to the point, what these tokens are ERC20 tokens, just with a few extra steps on top of them. I'm not sure how technical you guys want me to go into it, but let me know, and I'm happy to dive into the details.
I mean, just kind of layman's terms, but I mean, whatever you feel comfortable with talking about. But I mean, so they're ERC20 tokens, and then what kind of else is kind of involved in that? So each athlete has an ERC20 token then, correct? Like LeBron James will have his own token?
Yeah, so since, what makes NFTs special is that they're non-fungible, so there's one unique type of token. But where we differentiate ourselves is that these are fungible tokens. So you can think of it as Shiba Inu fungible, right? But built with AthleteX technology.
Very cool.
Yeah, so early high-level overview. We're building on top of some technology already in the ecosystem that has created a way to price financial contracts, right? And we took that technology and we're like, okay, like how do we use this to bring value to others? And at that time at my last apartment, I was asking around. There was the GME event. People were like, I wish there was a way to invest in the basketball game on the screen, just like I'm investing right now on Robinhood. And that's how this really came to life. These tokens are fungible. There's a type, like a LeBron James type, but there can be dozens or hundreds of tokens of that type.
Very cool. Very cool.
Yeah, and I think it's important to distinguish, Kevin, the fact that we're starting off with seasonal tokens. So we'll have a minting period and then expiry period in the token contracts. Am I correct, Kevin?
Yeah, that's right. So
Did we lose you?
Did we lose you, Kevin?
sorry, had a phone call come through, but getting back to it. So yeah, how these work is that to you can't create something out of nothing, right? So how these tokens are created is they're collateralized by AthleteX currency. So you deposit AX into a contract and you sort of take out a loan in an APT, if that makes any sense. But yeah, so since they're financial products, there's a point where they're created, and then there's a point you can set where they expire. And at their expiration date, you can take the token and then you sort of bring it back down to its baseline collateral. Does that make sense?
Okay. So,
And what determines the value?
What determines the value of a single APT?
Yeah, the end of the season, based on sort of, is it based on certain metrics or?
Yeah. So this is what Robbie was really like the main brain behind that. But the shorthand of it is, in baseball, there's this wins over replacement ratio, which is like the stat of a person's value over their whole team. And we sort of expanded upon that idea for other sports. And so we call it still a WAR ratio, wins over replacement ratio. But it's expanded to, I think, football right now, and then eventually basketball and etc.
Yeah, so to build off of that, when you buy an APT, you're speculating on that athlete versus their league's average performance. Like Kevin said, the wins above replacement, that replacement value represents the average performance in their league. So going back to the LeBron James example, if you were to speculate, I think LeBron James is going to have a fantastic season. Well, you would be speculating comparing him to the league's average. So we sometimes get a question from people, well, what happens if that athlete gets injured, right? What happens to their token value? Well, what would happen is, the athlete statistics represent the numerator in this ratio, and the denominator is the average statistics. So if they get injured and they're pulled out, that numerator kind of stays static. So that athlete's price is solely determined on what happens to the denominator, how well the average players do compared to the static value in the numerator moving forward until they get back in.
So if they got injured, it wouldn't necessarily be a complete negative. It would almost stay static.
Correct. It would plateau, but
Right.
if the average did extremely well, then the price of that athlete's token would go down. But if the average starts, just doing really, really bad, then it would still appreciate even though the athlete's out of the game.
Gotcha. And have you guys looked at maybe doing like tokens, just out of curiosity, like maybe like all rookies, and then like seeing the performance of like a particular player versus like all the other rookies in the same league, like maybe of like a certain class, you know what I'm saying, versus like instead of like a player being in and like someone who's just starting, right? Like maybe like a redshirt freshman or something like that, competing against people who are like senior class, right?
Yeah.
Performance are going to be different, right? But like, I mean, could you guys maybe do a class of tokens where the denominator is actually the average of maybe all redshirt freshmen, that kind of thing, or like
But
all rookies?
The pricing would also be reflected in that, right?
hypothetically in this situation, if we were to segment athletes by their, I guess in this case, skill or
Yeah, seniority or something.
I don't know if we've ever entertained that idea. I mean, we've definitely dipped into, segregating, college athletics versus like, professional athletics, since there is a betting market for college sports. But I don't think we've ever entertained that idea. It's definitely worth looking into.
Yeah, that's very interesting.
Mhm.
Very cool. And so, how many people do you guys have in total working on this?
I think right now, including the FAU team, we have like maybe 10 guys, Kevin, maybe more.
Yeah, but that's not including like some of our advisors, and then the ones that were slowly but steadily sweet talking to come on board a bit more. So Christian and Paul from Singapore.
Oh, very cool. So you guys are trying to go like international then, right? So you have people in Singapore, kind of have like a 24/7 maybe team working on this.
Yeah, absolutely. Like, and how we met Paul was we went through an accelerator program. I didn't know it at the time, but yeah, they were internationally based, right? And how their flow is that they start off with, it's really just like a funnel where they really try to capture the best from around the world, or those that they see with the most potential, and work them through the funnel. So at the end of the program, we like gave them our pitch. They were like, "Hey, why weren't you showing up?" We're like, "Too busy making money." But shorthand of it, yeah, they thought we had a lot of potential, and they introduced us to Paul. Paul's willing to give us, a run for a year to see, how well we work with each other, etc. And then from there, we'll see.
Very cool.
Yeah. But yeah, it's been great. The team definitely grew. It started with just I think initially Kevin, Robbie, and me, and then we had Alex come on, and he's our front end developer for the UI. And then it started growing, and most of this traffic, I think it's come through Discord and like social connections, which is really beautiful because we're trying to create a decentralized autonomous organization.
Right.
But we've realized really quickly, and I'm sure you guys will realize as well, the goal is to create a community-led project.
Mm-hmm.
However, it does take a select few individuals to kind of really push the ball forward.
Like spearhead it, yeah.
Yeah, you can't really expect your community to just hop on there and start building for you. It just won't happen. Even if you have the best idea on earth, you really have to kind of set the example, like lay the foundation, and push the ball forward until the community grows to a very sizable amount, and they have something to work with. Because it's extremely hard to get started, but once something is going and someone's already led the way, it's much easier to follow and then build off of that.
I think we hit on that a little bit the other day in the AMA, right?
Mm-hmm.
Yeah. Very cool. Very cool.
I was going to say, how are you guys thinking about governance models?
I think we're going to be going with
Blockchain or
Snapshot.
Yeah, a lot of people like Snapshot.
Yeah, it's really quick, really easy, just taking like literally snapshots of the blockchain to prove token ownership. But until we get that set up, which we're still working on, we're just running Discord polls.
Yeah, we so that one. Yeah.
And so essentially, you're thinking that voting will scale linearly if you have X number of tokens with some portion of voting power.
Oh, absolutely.
Yeah.
Because the goal is with the APTs, like we were talking about earlier, we don't want to be authoritarian with it. We don't want to be just like, all right, these are the ones we're minting, take it or leave it. We want you guys, we want the community, we want you to tell us which athletes you want, and we'll make it happen. That's the goal. So hopefully, that really pushes the utility value for the token.
Yeah.
Yeah. And
it's pretty. Oh, sorry, Kevin. I didn't mean to cut you off.
Yeah, just to short and sweet, right? Building off Aiden's point very quickly, but by design, we're really pushing for individuals to create APTs and to really move liquidity where they want it to go. This market is meant to be dynamic, and we really want to have a much less heavy hand on things, because we know that's what people are really looking for.
It's interesting because there are new voting models instead of kind of thinking of number of shares and voting power as a linear equation. There are like some quadratic equations. So essentially, like if you had 9 votes and you had kind of taken the square root of that as a, uh, your vote essentially would be normalized so that like you're pushing for further decentralization so that like
Right.
people that are whales that may have like 2 or 3 or 4% of overall tokens can't totally kind of sway votes or push votes over the edge and stuff like that. So that's kind of an interesting thing that's floating around is like this kind of like quadratic kind of voting equation.
That's really interesting.
Yeah,
It's really interesting.
something to consider.
Yeah, and Chris, what have you been working on recently for that?
Essentially, I've been thinking a lot about governments, but a lot of what I've been focusing on right now has been on scaling the DAO from 0 to 1 and how equity is granted. And essentially, kind of where we're at with that model is such where you've kind of determined your kind of your founding team and investment percentage of your total token pool. That's kind of reserved for those stakeholders, and essentially the rest is going to be your treasury that you can kind of pull from and leverage and stuff. But
Yeah.
you want to reward like early investors and like early adopters and people that are putting time into the project to help it scale.
Absolutely.
And essentially kind of what we've thought is we kind of thought of this this model that fits pretty well into contracts where essentially you have a roadmap with specific strategic investment priorities. Could be in marketing, could be in development to get to your MVP. And you're kind of thinking about those strategic investment areas. You're thinking about your roadmap commitments in kind of quarterly segments. So like, Q1, we're going to achieve X, Y, and Z, Q2, Q3. And when you're kind of committing that to your board and people that are in your community and even people that are buying your tokens, you really want to kind of be good on your word there and kind of execute there. And the way that we're thinking about ramping kind of with a kind of a cash poor type DAO that I'm sure kind of you guys probably aren't in the same position as we are, is we're using equity to kind of drive that equation. So, let's say we want to focus on go-to-market strategy. We'll focus on a percentage of, let's say 20% of that founding equity to go to specific marketing tasks.
Okay.
So it could be like, you send a tweet and maybe you get like 10 tokens. And that, those token values are supposed to represent how much work or effort that takes in kind of relation to what your token is valued at.
So how would you determine the value of these payouts for communal efforts towards the organization? I think it's an excellent way to approach this to incentivize the community to, contribute to the growth. I'm just curious, like, how would you value each of those tasks?
Yeah, essentially what you do is you have kind of governance committees where you have specific people that you'd like to suss out and kind of see what their fit is within that subject matter area. So you'll have like, maybe you'll have like a legal and regulatory governance committee, you'll have a marketing governance committee, and essentially what their job is to kind of think about what those t-shirt sizes are for those tasks and how much work and effort it is based on like their own experience in relation to kind of like the minimum quality bar that you're trying to achieve there.
Okay.
And essentially what you want to do is you set kind of some scalar, and if it's a task that can be completed n times, you want to set an upward bound so that like when all of that equity is reached, let's say you have a really broken scalar, like publishing a tweet gives you 100 tokens and a token's worth $100. I mean, people will use that
Absolutely.
that all day long. So you kind of build upward bounds to kind of keep people from totally abusing that and kind of totally washing away any sort of founding equity you have.
It's kind of speculative off of the committee, right? I mean,
Yeah.
it would be like if a lot of people aren't doing development work, then maybe you could like incentivize people more in developing.
Yeah.
Or like if people aren't doing marketing, you incentivize them there, or whichever kind of segment, right? But I think it's like a very unique system, and you read a lot of white papers, right, Chris?
Yeah. Yeah. Essentially, there's kind of a lot of prior projects that I've worked on this and some newer ones, and you've kind of seen equity as the driving force, and actually decentralization for like a lot of successful companies. So a lot of startup companies that are cash poor that like promise equity in the world, people buy into that equation and they're working on, a lower cash salary with equity on the line over 4-year vestings schedules to like really kind of amplify that company and their message and their product and such. So it's kind of an interesting model that we're thinking about, and you can kind of award that based on contracts on whatever chain you're using and stuff like that.
I mean, it's something that we're looking at doing for like when we actually do some more development, like from the DAO, not just like the founding team, like maybe having the actual community coming in and helping build the platform, right?
Yeah.
So like just kind of curious, like what did you guys end up doing for something like that? Like are you guys mainly just doing it yourselves, like the 10 of you? Or is it like have you had like actual community members contribute?
Yes, so we've had community members contribute. I had a link on the website for a while that led people to like a little application form, and then you come in. But the few members that we had on the team for a while that were contributing was usually because of word of mouth.
Okay.
I'll give you a heads up. One of the problems that you may face is dealing with the amount of power that you want to give people, right? Because the whole idea of decentralization is like, everyone comes and contributes, but when you think about it, it can get a little chaotic because we went through a stage where we had a couple team members who they came in and they really they're all about the decentralized idea, which is great, but then they were under the assumption they could just do whatever they wanted, right? So having some sort of like establishing SOPs, standard operating procedures, which kind of falls into what I was saying earlier, which is kind of leading the way, showing this is what's expected, taking that lead, and then letting them kind of build off of that. But at the same time, being very clear with their expectations on what they can do and what they can't do, which some may argue goes against the whole idea of keeping it decentralized. However, there is definitely a difference between decentralized progress and just utter chaos.
Chaos, exactly. You have to make progress.
Right. So, there is really no answer to how to handle it based off of my experience and our experience with our project. But it is definitely something to take into consideration. Is okay, we're trying to incubate an organization here that's decentralized. We want people to contribute, but still, there's got to be some sort of equal understanding of the ground rules and what's expected, while also nurturing that creativity and innovation. So it's tricky, but it's not impossible.
I mean, all this stuff is new too, right? I mean, so there's no like set standard or anything like that. I feel like a lot of people and companies are trying to figure that out themselves. So I mean, it'd be awesome if there was like, I'm sure 5 years from now, there'll be like a set standard how to like actually run these things, right? And maybe like someone will have like a very successful venture and they'll come out and be like, oh, hey, like this is what we did, A, B, C, D, just replicate this is how you can scale it down easily. Right now we're all figuring it out, which is kind of the fun part, right?
Well, it's kind of interesting because DAOs are inverting like traditional corporate hierarchies where you have like a board making all the decisions, but like in like a truly decentralized DAO, founders are essentially custodians trying to steer the ship.
Right.
And like at any time, like your crew can have a mutiny and just rip out certain people, whether they're good custodians or not.
Shout out Sushi Swap.
So essentially, that's kind of an interesting way to look at it.
If I can add some points here, really just building off what Aiden was talking about and what we learned from our experience something that stuck out to me, yeah, giving away too much power, right? So what we saw was, we had this like just wind in our sails, forward momentum, where people were just like telling all their friends, and they're like, "Hey, come join this, come be a part of this, yada yada yada." And it really did just get extremely overwhelming, and it was hard to keep up with everything that was going on. And at that point in time, we were really seeing the standard in the space being the Bitcoin standard, and of course, that founder disappeared. He never showed up. And so that's how we thought we should be doing things. Very light-handed approach, let people self-organize. And yeah, just like Aiden said, it just caused a lot of problems. People just like said, I'm responsible for this, or they just like got into like petty bickering and petty arguments. And yeah, it was really messy for a while. And it really took us founders taking more of that centralized decision-making role, getting rid of some people, really mapping out clear areas of responsibility and different things like that. That point about giving away too much power, yeah, this one dude, we gave him a bunch of tokens, and like in the midst of his frustration, he just like dumped on us and crashed the price. And
wow.
yeah, that's something that we've learned the hard way. We're still alive, we're still kicking, still have liquidity, but it's definitely just like, all these people live in different states. They all log in, and work on this in their own time. And so how do you organize? How do you keep people interested and motivated and not mutinize on you, right? It's
Right.
interesting.
Have you guys thought of minimum hold times, or like any sort of ways to prevent people from dumping and stuff like that? Or like, have you guys come up with best practices where like they could leverage your token and pull other stable coins out instead of dumping on you? Like, how have you evolved from like people dumping like right now to like the future, where like you have a bunch of founders that have like pretty good stake in like a coin that has pretty good momentum and is continuing to climb. You don't really want it to stop because of a few people's selfish actions.
Yeah, so I mean, Kevin included, me, Kevin, Robbie, and Alex, like the four OG guys, we are all under a vesting contract.
Right.
So it unlocks a certain percentage of our token allocations monthly, and then we can claim them. And so, we just kind of set that example, the precedent, to put that out there. Like, hey, we started this, but we're under a multi-sig contract here,
Right.
And we've vested our allocation over time. Now, everybody else that's working on the project, we just kind of pay them like salary monthly with our AX token. But to answer your question, Chris, we chose to run with a vesting contract. I don't know if you have to add anything to that, Kevin.
Yeah. For everyone else, it's really just their goodwill and their motivation, right? The difference between sweat equity in a traditional startup and sweat equity in a crypto startup is that this market is just a lot more liquid. I personally think it's a good thing, but it does have disadvantages.
Yeah.
Do you think like people that are kind of building sweat equity over time would have a knee-jerk reaction if you like built in like a minimum hold period, similar to like a company that's IPOing with like people with common stock that have to kind of wait for 6 months before they sell? It's kind of an interesting thing. I've been thinking about drawing parallels from like real markets, right?
Well, there are decentralized projects that do something like that. They have like a token holding period before you can sell. Like I aped into the police and thief NFT program, I think yesterday, and I can't.
Ask you about that. Yeah.
Yeah, and I think it's either I can't, because you buy the NFT and you stake it, and then you're earning their loot currency, and I either have to wait 2 days to take out my loot, or to unstake the NFT. I can't remember, but that does ensure that at least their stakers are holding their assets as collateral to the system for at least 2 days. But there can definitely be some problematic side effects for doing that. Especially if you're not clear. If you're very clear and upfront about it, I think you'll be fine. But if it's kind of like small, read between the lines, small text, like, oh, by the way, once you stake, you can't pull out for X amount of time. Yeah. That'll create problems because that will only create fear and panic. Like, what the heck is this? Like, rug pull type. Right. Yeah, or honeypot. If someone starts screaming honeypot, yeah, you never know. But I don't know if you want to add anything to that, Kevin.
Yeah. Really building off Aiden's point here, these markets really reward transparency and openness, right? You can't hide anything on the internet for long, if at all. And so it's just better to be clear about what expectations are, to be clear about what's going on. Yeah, no, that's it.
So do you think it's important for the founding teams of many of these DAOs to be known? Because a lot of the times they're unknown founders just because of the ethos of crypto.
In my opinion, when I look into investments, I dox a team. Like, I'm not going to be comfortable buying a project that isn't transparent. That being said, we don't have a teams page on our website yet. We've chosen to we're going to probably implement one and keep it kind of like up to each team member's choice if you want to be known or not. But we do have a LinkedIn page, and several of us are on there as under employees. So you can trace us, you can find us. I volunteered to set the president. I'm very public that I work for AthleteX. Just because I'd be a hypocrite if I didn't do that, because I always dox the team before I invest in the project.
I mean, it's an important thing to offer. I mean, we have certain developers on our team that work a full-time job that probably would rather not want to be known, right? For job stability reasons, right?
That makes sense.
Actually, that's a great point. I was going to add that. Like, internally, we know everyone that's working as a part of this protocol, but yeah, there are some, Alex being one of them, actually, that explicitly said, like, I'm not going to list this anywhere. I would like to remain totally anonymous. And we're like, okay, you have that freedom and that choice to do so. And these people still keep in touch. They still work. They just, for whatever personal reasons, job security, etc., they don't want to make it a big part, put it out there.
Yeah. I mean, what we did was we just put people's pictures there, so it looks kind of cool. I mean, we haven't added names yet. We wanted to go through and actually segment out team members and kind of say who's doing who or who's doing what and whatever. But I mean, I think to Chris's point, we kind of left a couple people anonymous and stuff. But yeah, I mean, it's definitely interesting seeing a project that has completely anonymous people. Sometimes they are successful, but there's a lot of rugs. Oh my God. And that's a little scary, just I think there's one, it was a Ice DAO or something like that I was looking at. I mean, there's been a couple that, when we were starting our stuff.
Parrot
DAO was another one that was really big. I think they launched in 5 days.
They raised, I think, 28 mil in liquidity.
Yeah, 28 mil. They
launched in 5 days. Yeah, and then they rugged.
Then they rugged 2 days later. And they had Soldier Boy fucking promoting it.
Yeah.
And you're like, what the heck? And I think he took down his tweet, right? But I mean, it was some kind of thing where invite, follow us on Twitter, get 100 tokens kind of thing or whatever.
Presumably after he rugged, he pulled his tweet.
Yeah.
Because they always tell them before they rug so that they're not totally burned.
Right.
Wow. Dang.
Yeah, that's terrible.
Dangerous move.
There's real world implications. People are getting hit with
is it? Kim
Kardashian and
Floyd Mayweather.
Yeah,
they're getting in trouble.
They're getting sued.
People. Yeah,
they're getting hit with joint lawsuits.
Oh, good. Oh my goodness.
Because they're promoting crypto projects that end up being rug pulls.
Yeah, if someone's got to pay the price for it,
Yeah.
These guys give us a bad rep. The whole space a bad rep.
Oh yeah, it's totally ridiculous. I mean, I wish people would just stop, because I've heard from so many friends that they're hesitant to get into the space because they feel everything's a scam. When really there are a lot of scams, but there's a lot of really cool and unique projects going on,
Absolutely.
and a lot of like things that I think will be like the next wave of like what everyone's going to be using day to day. But it is just really kind of sad that people are coming in and like just rugging people. I think there was an article I saw earlier last week that I think it was $14 billion in the 2021 that like people like crypto scammers like scam people out of.
Jesus.
I don't know how they got the number, right?
Yeah.
I can't
Especially in a
imagine.
decentralized ecosystem like
I don't know
wow.
how the heck they got the number, but
Yeah.
that's a lot of money.
That's a lot of money.
So
And you'd be surprised, like there are ways people are scamming people in here that you wouldn't even imagine. For example, a small project like us, when we launched our coin,
That's right.
we launched on Polygon. Kevin's about to laugh. We launched on Polygon, and we posted our listing on CoinGecko, but we didn't get to coin market cap in time. And some programmer, we're assuming foreign, someone went ahead and created a fake AthleteX listing on CMC and created a fake AthleteX token on Binance chain because we're on Polygon,
Sure.
we're not even on Binance.
oh my
And they started
gosh.
directing traffic to the Binance token, and people were buying it. And then they hopped in our Telegram and they started saying,
Accusing us?
yeah, they started creating FOMO saying, I can't sell my AthleteX coin, honeypot. All these people were
You guys are
sending
scammers.
death
no.
threats, and all this stuff. And we're like, what is going on? And we chased the contract addresses for the people asking refunds, and it was to this Binance address. And we're like, what the heck is this? And so we ended up just like putting out there, like, guys, that's not our coin. We don't know what to say. Sorry, like we can't refund you. This is a scam. And we ended up just like destroying that Telegram and like creating a new one.
Wow.
I'm pretty sure. But yeah, there's a there's a lot of smart people doing great things in this ecosystem,
Yeah.
but there are also a lot of smart people doing awful things.
Yeah.
My goodness.
Yeah, we did not see that coming at all.
I mean, I've seen that banner on a couple of new projects as well, like where they'll put like, hey, this such and such like contract at this address, that's not us, like don't use it kind of thing.
Yep.
It's a scam.
Well, they're even doing that in NFT space too, right?
Yeah. NFTs are having that. I mean, it's crazy. But I mean, just actually, like Kevin, I got a question for you. Why did you guys decide to go with Polygon?
That's a great question. Two things, really. One, I think they had the cheapest fees. For a while before that, we were looking at Binance Smart Chain. I remember, like talking about launching on BSU with Robbie. And then the other thing that really pushed us was SportX, who we partnered with. They were on Polygon chain. And, the benefits really just seem to outweigh the costs. Polygon is like stupid cheap to conduct a single transaction. And so it made sense for us to do.
Gotcha. And did you guys look at like Avalanche by chance?
At the time that we chose Polygon and started building, I don't think Avalanche came out. I think
Okay.
Avalanche came out like a few months later, though.
Gotcha. Okay. Yeah, because we're going to be building on Avalanche, and so I was just kind of curious, like what kind of went into that decision. Very cool. So, actually, Aiden, what was the layer 0 thing you were talking about earlier?
Oh yeah, the concept of just layer 0, the ability to have an interoperable ecosystem for blockchains for people to bounce from blockchain to blockchain, work between different ecosystems within one layer 0 ecosystem. I was just saying that's where I'm keeping my eyes on. If anyone's looking for projects to look into, like I was telling you, like Celestia is building a layer 0. Pocket, Robbie, he's on our team. His podcast, they just talked. I think the Pocket team, they're building a layer 0. I was just expressing my personal opinion that people looking for next big moves in the ecosystem, keep your eyes out on layer 0, just because.
Yeah, it's definitely a fascinating space. I mean, and then we this is before the podcast, but then we kind of went on a tear about how Ethereum will probably be like a B2B, where it's kind of like this layer or this chain that only works with like these layer 2 solutions. And so you as the end user will never end up actually using Ethereum directly, but you'll go through something else like an Avalanche or some other chain to actually interact with Ethereum. Have you ever thought about that, Kevin?
Yeah, a really interesting idea. I know Andy and Robbie refer, Ethereum as the L1, and then there's all these other L2s. The biggest thing that stops us from launching on Ethereum is, again, really the high gas fees and how expensive it is just to get started on there. But Ethereum is definitely just like the market leader, market maker, granddaddy of us all.
Yeah.
Right.
I mean, I saw something. Gosh, maybe it was earlier, maybe late last week, and they were citing that most of the development now is no longer actually being done on Ethereum. It's all either on Avalanche or Polygon right now.
Wow.
So
that makes
most
sense.
developers are all moving away from Ethereum because of the high gas fees. I mean, other than I think like NFTs, anything in DeFi, like anything that's actually an application, like it's moving away from that just because of the expense.
Yeah, and to build on top of that, it's just classic economics at work, right? Those with the cheapest costs wins, right? And that's why Amazon wins. That's why Polygon is winning. That was our motivation too. It cost fractions of a penny to conduct a single transaction. That's a no-brainer for us.
Yeah. Right.
Yeah, because we with our model, at least on our decks, going back to the product we're putting at hand. Every time someone buys, stakes an athlete token, does anything that interacts with the contract, they're gonna be paying gas. Last thing we want is someone that's new to the ecosystem, wants to try it out. They only put like $100 in, and now every time they want to interact with an athlete token address, they got to pay like $50 or some ridiculous amount, right? And we want to incentivize high trading volume because the revenue model that we work with involves a transaction fee, and half of this fee goes to the LP pools, the liquidity providers in our farms on our decks, and then the other half goes to our treasury, which then gets allocated to organizational efforts. And pumps the token price, which benefits all token holders.
Right.
So, we want to be able to incentivize, like I said, high trading volume. And that's really hard to do if everyone's paying, an arm and a leg for gas fees to trade an athlete token. So.
Yeah. I mean, I went to do, this is a while back, and I went to use Olympus for the first time, right? And I took $500.
Nice.
Yeah, well, I took $500, right? And I went to invest and buy like own tokens, all this stuff. Long story short, my $500 between gas fees and like authorizing my wallet to accept whatever, got whittled down to I think $200. So I spent $300 in gas just trying to like invest money. And I was like, this is insane.
You're already down like 60%.
I'm way down on my investor. I'm like, this is not worth it at all.
No.
I did. I then found Wonderland later, which that's on Avalanche, and way cheaper. I think I had $500 on that one. I ended up like actually investing maybe like $475 or $450 or something like that. Way different experience. I imagine Polygon's the same thing. I haven't really used too much with Polygon, but I imagine it's the same kind of experience. But yeah, Ethereum is extremely expensive. Extremely expensive.
And while we're still on like the whole DeFi topic here, another feature we have on our decks aside from the swap is, like I was alluding to earlier, our farm page. So we, like I said, we want to keep everything decentralized, and that even comes down to the liquidity and collateral that's provided for these athlete tokens.
Oh wow!
So we created farms for not only just AX, like single-sided staking, but you can buy AX, hop on our decks, and just stake it and earn a healthy little yield, or you can also buy athlete tokens and pair them with AX or pair them with some of our partners like Matic and SX token and put them in the farms and provide liquidity for the athlete token trading. So if you speculate that there's going to be a lot of trading for a specific athlete performance token or APT, you might want to consider putting in some, offering some liquidity to that farm because the transaction volume behind you'll be collecting those fees.
Gotcha. Very cool.
Yeah. Additionally, for anyone who's interested in, copping a bag of AX, we have a partnership with Geyser right now. They create LP incentives to their website, so you can go on Sushi put up some AX and wrapped Ethereum, get those LP tokens, take those over to Geyser, and we still have tens of thousands of dollars worth of AX and Geyser rewards sitting there for you to take just by leaving your LP tokens in the pool. And we have a handful of people in there staking and earn those rewards, but like I said, there's still a lot more to take advantage of for any of you DeFi farmers out there. But yeah.
Very cool, very cool. And how do you guys go about getting some of these partnerships?
Probably Robbie, because he has
The podcast?
his podcast
Yeah.
late, and he's
Kicking it, huh?
yeah, he knows lots and lots of people. And I think that's actually the answer to the question is Robbie, right, Kevin?
Relationship based.
Yeah, for the crypto side of things, definitely Robbie. And I guess sneak peek for you guys, as you guys grow, develop more relationships with people. Maybe one of you guys will have an idea to start your own crypto protocol and like build a product around it. There's
Yeah.
yeah, there's the foundation. Yeah.
That's awesome. Yeah. Did he have the podcast before he started like with y'all?
Mm-hmm.
Yeah. So he started DeFi Slate, and then a year. So really, our founding story, right? Robbie started DeFi Slate with Andy, who he knew through college, and then about a year later, he was pining around looking to start AthleteX. It was him and this guy Sam at the time. And at the time that I came on, it was really just a really rough sketch of creating assets that are uncorrelated to the dollar. That was just like the rough idea around that. And we really, fine-tuned it to a point where it was athlete tokens. And I think we were like looking to launch on Solana back when it was like 50 cents or something. I remember I was like, dude, what a mess. We were building on that. Anyways, yeah, it was like, it's just crazy. Anyways, so what we really settled with is Umo technology and Polygon chain. And it's been so far, me, Aiden, Robbie, Alex as the founders, and, continuing from there, growing from there.
So to all the listeners, in the fullness of time, what does your roadmap look like? Where do you guys want to be in like 3 to 6 months or?
3 to 6 months, I guess short term. We have a roadmap on our Discord, which maybe we can drop in the link in this.
Yeah.
After the podcast, not right now, obviously. But we have a roadmap in there. I think right now we're really focusing, pushing out our testnet on Polygon's Mumbai testnet network by the end of the month. I'll be running lots of user testing to kind of pull some insights from you guys. Anyone who wants to contribute, you can earn AX by participating in our user testing sessions, and we'll take that feedback and we'll iterate based off of what you guys want or you don't want or you like and don't dislike. But yeah, we're pushing out over the next couple months testnet and then mainnet for our desktop UI.
Okay.
And then we have a team of FAU students working with us, creating our mobile UI, which I'm still working on the design mock-ups for and pass on to them, and then they're gonna manifest into the actual working application. So we're hoping to have like an app out by the end of spring semester.
Very cool.
Yeah, and I think we're Kevin, if you want to add more to this, I think we're just really focusing on that short term first. We have like a rough roadmap for the rest of the Q3, Q4, and then maybe even beyond that. But it's a little futile, in my opinion, to plan further out than like 6 months because so much can change.
Yeah, exactly.
We can see a giant market crash. The bear market can start. Legislation can just ban crypto. Who knows? China bans crypto for the 24th time.
US Fed coin, and they just wipe trillions of dollars.
True.
Oh my goodness, I hope not.
Fed coin bad.
Or the ultimate bull run.
Yeah, or the ultimate bull run, which is what we all want. Yes. But yeah, Kevin, if you want to add to the roadmap question, please do.
I think you covered it, and it's also listed on our Discord. User testing next week. FAU team working on mobile. That's right. Predictions for the year, and this is just like my personal prediction and how I'm like planning my life. I think that we are going to pump at least till like March or so. Fed is announcing rate hikes, but they're like on a like, what is it, 10 basis points, something like that. Going from 0.1 to like 0.05. But point being, I think that will shake the markets just because whenever the Fed does that, it causes a bunch of problems. And so, like we spoke about it earlier in December, it's important that we're just fully out there before that time really hits. And I've taken the steps in my life to really make sure that, we achieve these roadmap goals, and are really just like fully churning, fully flowing by the start of this year. And then really by the later half of this year, we'll be looking to really like integrate much more strongly with SportX, our partners. Those guys, when we first sort of met each other, touched base, I think they were like just crossing their first 1,000 people in Discord. And now they're mooning at like they're approaching, I think, their first 4,000 in Discord. They're making money hand over fist. And they really want to tightly integrate with us and really create a whole sports crypto meta community where we all hang out and play Kumbaya.
There you go.
Yeah, and it's really great because like, they're kind of paving the way for us to an extent because they're still dealing with gambling and fantasy sports. Actually, I don't even know if they do fantasy, but at least just sports gambling, and we're sports investing. So we're blazing our own trail, but at least they are providing some insight. For example, we had to make a decision a while back when it came to our go-to-market strategy. Like, okay, who are we marketing to? Who's our target audience? And it's obviously it came down to, I'm not gonna say obviously, but it came down to heavy crypto natives at first, who also happen to like sports. Because to use our platform, you have to first buy crypto. Right. You have to send those funds to the Polygon, POS network, and then you have to then interact with our application on there. And for some of us, heavy crypto natives, that doesn't sound hard. It's like, oh yeah, we cross bridges, transfer funds every single day. For someone who just knows what Coinbase is, they get lost at MetaMask wallet, and it's like, oh my god. We provide guides on our Git book for people who want to learn how to do this, and provide like a really helpful user experience. But like I was saying, it came down to, okay, we got to target crypto natives first, and then as accessibility improves over time, we can then start to satisfy the needs of the sports natives as well. And we kind of came up with this intuitively, but then we had a meeting with SportX, and they kind of reinforced it when they told us, we've learned firsthand that it's much harder to teach sports people crypto than to teach crypto people sports. Which is, kind of really basic way to put it, right, but it gets the message across. And so, when it comes to at least targeting your audience and, you're formulating your go-to market strategy, that's definitely something you have to take into account, because like we were talking about before the podcast, unfortunately, UX is lacking in the crypto space, right, but it's due to the fact that, the technology is kind of like not really keeping up with the demand, hence the congestion on layer ones and the high gas fees and all that stuff. But that on the other side provides a huge opportunity for any UX UI designers out there for figuring out solutions to these problems, for providing a really helpful user experience to anyone who wants to interact in the decentralized ecosystem, because there's a lot of money there's a lot of opportunity. It's just that learning curve is extremely hard. But it's up to people like us to smooth it out. So I didn't mean to go on such a big tangent there, but yes, SportX has been great. They provide us that insight, that reinforcement. And one other thing that they did tell us was to focus on, instead of releasing a ton of athlete tokens at once, they think we should just focus on like maybe 1 to like maybe 3 max, and just really picking ones that our community wants and having them buy and just trade amongst those and growing from there. I can't really remember the reasoning behind it. Maybe if you do, Kevin, please pitch in. but it was definitely something that we did not intuitively come up with. We wanted to release as many as we could at first, have tons of options, but then they countered like, no, just focus on a few, and that's what we're going to be running with. But if you want to add anything, Kevin, please do.
Yeah, great segue, Aiden. So yeah, building off of the points that you brought up, the things that SportX taught us was, hey, this is really possible. I remember looking on their Discord, their community calls, and they're like, hey, we're making like 2 million every week, and these numbers are growing. I was like, holy shit.
Wow.
That's crazy. Yeah.
Great business.
Yeah, it is a cash cow. And so when we got on call with them to better understand, what they were like when they were at our point in time, Jake said to really maximize liquidity, and you make your money on the whales that drop like $10,000 or so on on a bet. Excuse me. You really want to start with like a really concentrated offering of athletes that people want, and then you really want to just like get people running and coming back on a daily basis. And it really, for me, what I got from it was really affirming sort of like the startup theory things that I taught myself and the things that I was told was true, but I needed that affirmation to know that was definitely true, right? Of really focusing on a very niche, very small, specific set of people, get people that are really excited, like that guy Marius in our Discord, who's like, hey, here are these ideas. Hey guys, I have these questions, I have these suggestions. Focusing on people like that, making them very happy and meeting their needs, and then scaling up from there is how you really make it. Versus closing out here, versus those that flash hot in the pan and glow up like ice style, and then they disappear in like 2 days.
Like ice style?
or Doodle Dragons.
Yeah.
Did y'all
There's
hear
just
about
like
that?
plenty of them.
Oh, see, you should tell a story about Doodle Dragons.
Well, basically, they just created a project, and he said instead of donating it, the donations are going directly to my bank account.
Oh my god.
Goodbye, nerds.
Yeah, that's hilarious.
It was like, what was it, 30 million?
It was tens of millions.
Lots of money.
And it was a ripoff of the Doodle's original NFT.
Yeah, he put dragon heads instead of like normal people's heads.
Oh my god.
But he was supposed to donate money, like 10% or something like that, to like animal rights or something. And they just said, "See you later, nerds."
They posted it on Twitter to everyone.
And this guy was public with his identity?
No.
I was going to say, dude, someone's going to murk him. Oh my god.
There was somebody I heard about the other day, though. Was it on our AMA?
It depends.
There was some project I heard about the other day where the developer actually ended up rugging the people who... Was that you, Chris?
Yeah.
Yeah, you should tell a story. What was that?
Essentially, I had some friends that were building an NFT project, and there were some disagreements, and the lead developer who had access to the entire mint collection or whatever, he ended up rugging because he was pissed off and basically screwed over all of his investors and founders and stuff like that. Just ran off.
But they know the guy.
And they knew the guy.
They know the guy.
He's in a different...
You can't do that. You can't just run off if they know you.
Yeah, that's the stuff of nightmares, honestly.
So I mean, I feel like people are getting more and more bold because there's no regulations or no real sort of white collar crime sentence for any of this stuff. So people are going to continue to do this all day long under the guise of anonymity, or if they get really bold, like just do it because they can. It's an interesting world out there, and we're trying to prevent that with this podcast with new projects. So.
That's exactly right.
So we appreciate you out here, and bringing validity to Web3 in the crypto space.
The cryptosphere.
Yeah, the crypto sphere.
Yes, sir.
Space.
Heck yeah.
We've been rolling for a while, right?
Yeah, we've been rolling for about an hour. Should we ask people questions? See if anyone on the stage wants to come up and ask any questions?
Yeah, we could open it up.
Light us up, guys.
Just raise your hand on the stage to ask questions.
I wonder if they're there. They're there.
Ed's-
But I wonder if they are there.
Ed's there.
Yeah, Ed.
Yo, Ed, you should come up and talk about your monkey DAO.
I think Bell wants to ask.
Oh, show request.
Got a shy crowd, huh?
Super shy.
All good.
Yo, Ed.
What's up? How's it going, everyone?
How's it going, Ed?
It's going well. It's going well.
So Ed is a huge Solana bull.
If you can't
I
tell.
I wouldn't call myself a maxi. I'm a big fan of. I haven't explored Polygon as much as I should probably, but Avalanche, Solana, Ethereum obviously is where I got started. But
Well, Bella's at her own audio.
Yeah.
She's got her own
Barking
question.
at nothing.
what's up?
Oh, Bell, can you guys hear Bell? The dog?
No, I can't hear anything.
There we go. It's
Oh, this is
filtering.
perfect
That's
then.
great.
This is perfect.
Yeah.
We thought you guys could hear her. She's barking at the window. No, but Ed, how long ago did you get into Monkey DAO?
So yeah, I'm on the Monkey DAO on Solana, which is like the DAO of Solana Monkey business holders. But I got into that probably about 5 months ago. I kind of rode the whole Ethereum NFT train, which is still going strong right now. I just jumped off a little early to switch over to Sol. But kind of probably started that like 9 months ago. And then that was like prior to all the network congestion that's going on now. So gas fees were a lot more reasonable. But yeah, then it kind of got just out of hand for anyone retail investor. So Ryan, like the story you said about trying to invest $500, I kind of went through the same experience trying to invest in the Yearn or different Yearn finance vaults.
Oh yeah.
And just trying to get like a 15% APY in stablecoins. But if you don't have sort of whale amounts of money, it's not really reasonable. And then that's kind of when I started looking for alternatives and stumbled onto Solana. So yeah. But I'm a big fan of Avalanche and Ethereum as well.
So Ed, I know you've been doing sports betting and stuff, right? Are you still doing that?
Yeah, I do a decent amount. I'm a fan of a lot of the prediction markets that exist. So like Poly Market's a big one. They exist on Ethereum on a layer 2. I forget which layer 2 they use. I think Polygon, and then
I would assume. Polygon.
yeah, a lot of prediction markets that have sports related markets.
Yeah.
What do you?
Oh, we were just joking about Poly Markets is probably on Polygon. You know.
Yeah.
Oh yeah, so true.
Well, that's perfect, Ed, because you're into sports betting and you're obviously into the cryptocurrency industry. What based off of what you've heard so far, what do you think about our project? And you can be, if you hate it, you be completely honest. If you love it, great. I'm just curious to hear some honest feedback.
I also need to look into it more because I joined the call a while ago, but I kind of missed the first intro. But I'll definitely have to check it out. But I honestly, I have to look more into it, to be honest.
Okay. Yeah. I'll make sure to send some links into the general chat.
Yeah.
After we're finished here for sure.
Yeah, we'll have links and everything, show notes, and we'll post it on here, and then we'll also post this on YouTube. So there should be links everywhere.
Nice.
Yeah, but Ed, I think you'd honestly really like this project. Matt Smiley bought a bunch of tokens the other day, right?
He unfortunately bought right before that one team member dumped.
Oh god.
I'm sorry, Matt Smiley. It's okay. We're going to the moon. It's just a matter of time.
He needs to adjust his cost basis and double down.
Dollar cost average us, yes.
You know what? That's what we should tell him. Just double down, man.
Yeah.
But yeah, Ed, I think you'd honestly love this project. I mean,
Yeah, definitely. Is this? I don't want to make you repeat anything, but just generally speaking, you can invest in sports related, like specific athletes. I would assume.
Yeah, I
Yeah,
mean,
so
yes. Oh, Kevin, you go ahead.
gotcha, boss. Yeah. So short and sweet is fantasy sports meets the stock market using cryptocurrencies.
Nice.
Yeah, so
Yeah.
basically we're creating digital tokens, ERC20 tokens that represent specific athletes. And the prices of these tokens are solely determined by that athlete's sports statistics, which we're pulling on chain, I think through Chainlink and sportsdata.io. And they're running through war statistic calculation, which just takes that athlete statistics and divides them by the league's average. So you're speculating on the athlete's performance against the average. And the beauty of it, which I haven't mentioned yet, is that we completely cut out all other factors. Like hype, clout, net worth, supply and demand to an extent. And we really want to tailor our product to those who are really good at predicting athletic performance on a data level, on a data analysis level. Like in the movie, I don't know if you've seen the movie Moneyball.
Yeah, of course. Classic.
Yeah, so like Jonah Hill's character, that guy who can like look at a team and just run their statistics and speculate on what they need to do to perform well, and also speculate on whether or not they will perform well. That kind of guy would make a killing on our site. So yeah, hopefully that provides a little bit more insight into what we're doing.
Yeah, definitely.
Small but important detail, excuse me, is that these tokens are not priced in US dollar terms, they're priced in AX. I don't know if that changes anything or like what's going through your mind right now.
No, that makes sense. And AX is your kind of native crypto.
Yeah, so you can use it to create, sort of instantiate via collateral of an APT, and then you use it for the buy and sell. Our thesis here is we need more than utility. We really need to create like an economy around our token. And so how we're going about it is, of course, buying and selling goods that people want with our token.
Yep.
very cool. And Dalmar, I see you hopped up on stage. Do you have any questions?
Yeah, absolutely. I meant to just raise my hand, but I guess I just jumped on stage. Yeah, but nice to meet you all. Honestly, I was taking a look at your website and what you're all saying about investing in athletes. So based on the short and sweet explanation, you were saying best betting on the athlete versus the league average, right? So is that like saying if I'm betting on, or if I'm investing in LeBron James versus the league average for NBA, then this would be like statistical anomalies in terms of what he's doing is a good thing to invest in, I guess.
Yeah, so you would, if you were to speculate, LeBron James is gonna have a great season, because we are starting with seasonal tokens, then you would be buying that token and speculating on his performance against the league average. Does that answer your question?
Yeah, I think so. Yeah, definitely. And so, let's say Russell Westbrook, right, averaging a triple double, that type of thing would be something very just outside the norm, like outlier, right, in terms of performance, and that would be something that by investing your AthleteX token into Russell Westbrook, you could see whatever return from that.
Yes. And obviously because it is in a wins above replacement ratio format, there are two factors that go into play in that pricing. So either the numerator, which is that athlete statistics, exceed the denominator, causing a price appreciation, or if the numerator were to stay static and the athlete, their statistics were pretty flat throughout the season. However, the league average, decreased in performance, then the athlete token price will still appreciate. So it's literally as simple as just a numerator over denominator. Numerator being
Right.
that athlete statistic, and the denominator being the league average. So with those rules in play, you take that as it is, and you make your speculation based off of it.
Okay.
Yeah.
Yeah, no, I mean that sounds really cool. Honestly, gives some, as you said before, people who know crypto already, but people who know crypto and are sports nerds, a way to really exercise that deep knowledge or deep obsession with the sport, and like learning, which athletes are, really exceeding that wins over replacement number. So it sounds really cool.
Thanks, man.
Yeah.
And cut it.
I mean, does anyone else have any other questions before we kind of close up? Tommy, you have a question? I want to invite Tommy.
He said no.
He's probably just chilling. If he
He's wondering when the Broncos are going to go back to the Super Bowl. Is what he's wondering,
LOL.
and if he can bet on that anytime soon.
Well, I don't think we'll have
Yeah,
any
that'd be what,
tokens.
15 years?
But... Sorry, what?
What?
I said that'll be what, 15 years?
Yeah, exactly. We're waiting for Peyton to come back.
Yeah, I don't think
Yeah, I
so.
mean they might buy the team.
Yeah.
Manning's could buy it, buy the whole franchise.
Let's see. All right. Well, no one else supposed to come up. All right.
I think Torpedo has his hand raised.
Before we wrap up, where can people find you at? Socials.
Yeah. I'll make sure to drop some links in the Discord general. But our website has everything you need to know to find us everywhere. Our website is AthleteX.io. Literally just the word athlete, the letter X.io. Feel free to hop on our Discord, ask us questions. We got someone on there, I wouldn't say 24/7, but we're on there pretty often. And for those of you who know Solidity, who, want to side hustle, earn some AX, diversify a little bit, get some experience, we are hiring. So, we got a great team and, fun crowd, and we're working on a novel project here that we all believe in. So if you're interested in what we're doing, hop on our website, learn more, hop on a Discord, learn even more. And, just share your skills, and, let's just take this project to the moon.
To the moon.
To the moon.
It's a very, very cool project. So just in close, thank you everyone for showing up. Thank you, Aiden, for coming, Kevin for coming as well.
Thanks for having us.
This is our first Cryptosphere podcast.
Yeah.
We can only go up from here.
Yeah.
So
More to come.
Yeah, more to come. And thank you guys.
Cheers.
Cheers.
Word, yeah. Thanks for having us. And more life to your success.
Thank you, Kevin.
I'll talk to you later, Kev.
All right, see you around, Aiden. Peace.
Peace.